Good afternoon, this Thursday, May 21st. Well, we don't have to break everything down. You know about the story. Some of the air coming out of grains this week has been the China factor. China has not followed through on their side and said, yes, we are going to do all this, buy the 25 million metric tons of beans, spend about $17 billion on other agricultural products, and lower their tariffs. Well, they haven't lowered the tariffs yet, so the air is coming out on that factor. Then there's the crude oil factor. Now, that's an hour-to-hour event this morning. Crude oil back up to $102 a barrel on concerns that the Iranians were not getting something done right for the upcoming weekend, and Trump may unleash his Air Force on them and the Navy again. Well, with that, around 12 o'clock, when grains were firmer on the session, the Iranians came out and said they had a plan put together. They'd be releasing it within hours. And of course, there was some stories of what was in it. There was talk about a free-flowing Straits of Hormuz, but that they had a checkpoint area. That doesn't sound right. And some other nice things, but something left out in all the communique was giving up their nuclear capabilities on regarding what they have for material. Well, President, of course, what happened then was the crude oil market collapsed about about $5 or $6 a barrel in a short order of time. And then President Trump was interviewed later here after the grains closed, and he said, well, we're going to get the fusion, the nuclear fusion stuff, no matter what. We're either going to have it, we're going to destroy it, or we might keep it. Don't know, you know how President Trump talks. But that said, oil recovered on that news back above $97 a barrel. So I just got to bring that to your attention because that's all part of the equation of all the moving parts. Planting progress is good. Weather is good for the Midwest, Northern Plains. We're going to catch some rain. But Brazil remains very dry. So let's get to all this and see if we can put together a picture of what's happening. First off, here's crude oil, just to kind of remind you of the battle lines. This was this apex I was talking about. This morning we were pushing up to the upside. This is a 6-hour chart, so keep in mind there's only 4 bars a day. And then we plummeted on the news. From here, we were at about 12 o'clock. And here's where we were about 1 o'clock. And again, that took the air out of the grains into the close. But then we recovered back to the channel line here as I am talking to you here a little after 2 o'clock here Central Time. So I have no idea where it's going to be when I get out of the studio here producing this. Could be here for all I know. But nonetheless, on the daily charts, we just remind you the battle lines. If we break down, a lot of support comes in here on the 77-day moving average, which normally was in control of this oil market. And of course, you have this channel line. You can see a lot of support. So let's just say 88 to 90 is where we head back to initially before some kind of a bounce. And then you can see a downtrend line off the highs. You can almost do measured move theory here yourself. And then we move lower again later in time. That's if we have a deal. If we don't have a deal, we're going into a 3-day weekend. President Trump likes to do his work with the military over the weekends. And that's when we will probably go after more, what do you call them, Muslim clerics that are new ones in charge and change them out with some that are probably more attuned to what the people of Iran would like. And that is to get this over with and done and move on with their lives. There's 95 million people in Iran. They estimate that barely 9 million, 10% of the people probably agree with the clerics. The other 90% want them out and want a new life. But the problem is, they have to get in control and overthrow their power. When is that going to happen? That's the big problem. And so this is crude oil. This is the facts of life. We do obviously have the resistance defined here unless President Trump goes in this weekend, and then we change this whole thing. But the Strait of Hormuz needs to get open, has to be open by the end of June, or we're going to be looking at a different world here in the future with inflation so bad. And your fall fertilizer purchasing, oh, that's not going to be what you think it is. It's going to be a disaster unless they crank corn up to 550 or higher and crank these beans up a lot higher too. Or there's just not going to be any production. That's reality. If you're getting value from this video and want more, just check out our daily newsletter. Each morning we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Now, let's go to South America, Brazil. Again, I showed you in the last video on Tuesday where all the corn is grown for the winter crop. And this pretty much is where the bulk of it's growing. Yes, there's a little bit over here, but for the most part, here's where it's growing. Mato Grosso will be probably beyond pollination here this week. There are some already thinking that the 135 million metric ton corn crop out of Brazil has already lost maybe 5 to 7 million metric tons of production. That puts it back under 130 million metric tons and could be dropping if these areas don't receive rain. This map goes through Thursday, May 28th, so we're reaching out a week, which is the only thing reliable in weather. This is the Euro weather map going out through Wednesday. I can get it to. Same thing. It does not look good. The top is coming off the Brazilian corn crop, and eventually that's going to filter back to the Chicago Board of Trade, and they will drag their feet as long as possible before they start admitting to a problem there. So here's the corn chart, July contract. Keep in mind, crude oil plummeted into the close of the corn market. Corn had an overnight low of 460, then it bolted to new highs on the session to 469 before heading out right there at 462 3/4. Chances are we're back above the our pink line here. That would be the 20-day moving average. I believe I can't see it up here. It's this one right here. The blue one is the 200-day moving average. And you can see massive trend line support going back to January. What am I going to say? Well, basically, I'm going to say there's major support in the corn market here, and we either have an energy pop again or a China pop. That China is going to be coming and announcing their tariff reductions, which will pop this market alive again. And how about a hint of corn to China? Because this morning's export sales numbers, did you see them? Over 2 million metric tons. The highest guess was 1.6 million metric tons. We were like 2.1 million metric tons, erasing the deficit that was last week of 1 million metric tons and putting us back on track that the USDA and upcoming WASDE reports is going to have to lower old crop carryout by another 150 million bushels because their large enthusiasm for exports isn't large enough, is what is happening. The world wants our corn. And so corn potentially had a 1, 2, and then we have a 1, 2, and then you get another 1, 2 before a possible lift on this corn market, old crop corn, probably into the 490 plus range. We'll see here. Action over the 3-day weekend could be shifting this thing. Seasonally, it's not the time to be bullish without a weather crop problem in the U.S. But we have a weather crop problem in Brazil, and we have a problem with Iran. Whether it gets fixed or not, we'll see. This is July corn, just showing that also today's low was a 786. This low was a 786 of this. And this low, I have to go back. I didn't mark that one. I think it was less than a 786, but more than a 618, so it was in the box. So we keep doing a series of higher lows and, believe it or not, higher highs. By the way, that was 1/4 cent, but it's still higher highs. So one would anticipate July corn, a higher high. We'll see. Unless we close 2 days solidly under the 200-day moving average and the long-term trend line, then things shift. But we are longer-term friendly corn. December corn, same thing, coming down to a trend line and moving average in here. The 480 mark, plus or minus a few pennies, probably 478, more likely 477, if it moves lower, should bring us another recovery bounce. What it's tied to, we'll find out. China, Brazil, maybe our weather starts getting a little haywire as we get into June. On soybeans, setting back, you can see here the breakout point could still be a target to the 1180 range. Also, you can even see here, if we shoot a trend line up in here, you get into 1180. So you can just see sideways and lengthwise, 1180 on this range is becoming important for spot beans if they're going to get something going here. Otherwise, we have a failed fifth if that is our high. On November beans, moving average has been the 27-day moving average, the accurate one, but they spike it a lot. What this tells us, 1170 to 1176 is support on this setback until it's not. When it's not, then we start heading south. But we did get lucky on the high day of this recovery bounce. We rolled our $11 puts up to 1180 for just a 20-cent cost. We now have 50 cents into these puts, which means your net is 1130. But what I like about this, I think most of the world's got the beans basically sold right here. We have them netted out at 11.30, plus we have a 15% sale at 11.44 on the board or at your elevator. Likely, if this thing is not collapsing into the end of July, they expire July 24th, they'll certainly probably be in this 11.30 to 11.50 range, which allows us to get our premium back. We can roll that premium into an in-the-money bean put at that time because they will be deflated heavily. KC wheat. Well, there's two things can happen. Either our A wave was done and we B wave popped, and it was a shallow B wave, and we are now heading in a C wave decline from the current high. If we don't get back tomorrow on a Friday or on Tuesday, back above 687 here, 686, because that is our important 21-day moving average. This is the 50-day moving average. It's rising to the breakout point now of 665. If we have another trip up and we bounce here this Friday into next Tuesday, maybe it's because of Iran, maybe it's China, then we have a higher wave B before a possible C wave into harvest, because they always knock this thing down into harvest. It's going to be an early harvest. It's going to be an early wrap up for harvest. So to set a seasonal lows in July, you might even see a seasonal low before the end of June, before wheat futures turn higher. And I am projecting December KC wheat will ultimately trade above $8 because there's a lot of wheat around the world. That's not going to happen. The Canadian crops can be smaller, Brazilian, India, Australian, because of less fertilizer application, because they don't have it. Frankly, they haven't gotten it out of the Strait of Hormuz yet. It's going to be a problem. Wheat production in the future is on the decline. August live cattle, they gave it up. The moving average support, 40-day moving average, and the trend line got hammered today. Rumor has it, I think here's the story. Not only is Mexico announcing they're going to be now exporting beef to the U.S. under our free trade agreements, North American trade agreements, because they've had cattle accumulate down there because they haven't been coming here. Well, they've been running their slaughter plants down there with plenty of help for people that are working at their plants to run overtime 24 hours a day if they want them to. And they do not have country of origin labeling. This is my assertion now. They do not have country of origin of labeling. They struck a deal buying beef from Brazil. Well, it'd be pretty easy to slip Brazilian beef into Mexican beef and pump it on up into the U.S. like they did with parts and cars and all those other things John Deere pulls off, kind of an easy thing to do. And we don't have any way of discerning Brazilian and Mexican beef apart from each other because they're both mostly grass-fed. So they're going to taste about the same, to me, like garbage, but others would think otherwise. But nonetheless, Brazilian beef is probably on the way via the conduit of Mexico, and that helped cattle break down, which destroyed the feeder cattle. Here's the August feeder cattle chart. We have been discussing 366 resistance. All this mess did stay under 366, and now we're breaking down. Look for tomorrow to open lower on the limit down status. Probably challenge 352, and if they don't slice through it, to get a little bit of a bounce off of that. And if they're bearish, they're going to get sold and break lower yet. On the continuation chart, I have to tell you, we highlighted this in yesterday's report, that circle on there, so you could see that it was 366. It was the trend line. It was the 20-day moving average. I make a big deal of the 20-day. It's the blue line. And it's the feeder cattle market. On the continuation chart, it runs this thing. We're underneath it right now. We're bearish. We have what is likely a head and shoulders top. Left shoulder, head. I said the right shoulder in the strongest bull market ever would probably be elongated. But I said even if it even closed above this high by one day and then dropped lower, it'd still be a head and shoulders. Well, we never did. That looks like your right shoulder just near 380. And for all intents and purposes, technically on the charts, we are walking lower on this thing. I have one more chart on here. What is it? All I did was I zoomed it in here. Potential wave one down to 343, 345, and then 340. That is probably the target of wave one. We're going to the 340 range on August feeders. Sounds crazy. I know. Every cattle buyer in the world out there will tell you that it's garbage. It's not true. Well, that's not my job to tell you what the cash market's going to do. My job is to try to help you figure out what the futures market is going to do. And it looks like we're breaking down into a wave one. And then we can get a nasty wave two all the way back up here for another left shoulder, head, and right shoulder later on in the summer. And then a break lower into the fall months. We'll see. That's called measured move theory. That's how you plot things out and try to have a picture for the future. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.